Ladies and gentlemen, welcome back to the SteelOrbis Fall 2020 conference and the 83rd IREPAS meeting. In this session, we will be listening to the views of the chairman of the IREPAS committees, and then they will be answering the questions sent in for themselves. Before then, I'd like to remind you that we have our third poll available, and we are looking for your responses. The poll question is, how do you view the balance of imports and domestic rebar production in your country? The answers are well balanced, too many imports, not enough imports. So the poll should be seen on the right-hand side of your screens. We'll appreciate if you can please pick your answer. I'm sure most of you already know our speakers at today's panel very well, but still, please allow me to introduce them briefly. Mr. Jens Björkman is the chairman of the IREPAS Raw Material Suppliers Committee, and he's joining us from Stockholm, Sweden today. Mr. Dan Baysal is the co-chairman of IREPAS Traders Committee and joining us from Miami, Florida in the United States today. Mr. Wilhelm Alf is also co-chairman of IREPAS Traders Committee and joining us from Bottrop in Germany today, right, Willy?
Right.
And Mr. Murat is the chairman of IREPAS Producers Committee and, of course, the chairman of IREPAS. He's joining us from Istanbul, Turkey today. So before we start listening to the chairman of the committees, may I request my colleagues to end the poll and share the results with me so that I can share the poll results with the chairman of the respective committees. Let me remind the poll question. How do you view the balance of imports and domestic rebar production in your country? Well balanced, too many imports, or not enough imports? Thank you very much for your responses, ladies and gentlemen. I'm trying to get the results of the poll, if I can. I'll try to share the results with you later. I'm having some problems with these polls, unfortunately. Yeah, now first, let me go on. I would like to request the chairman of the IREPAS committees to share their market views with us. As always, I'd like to start with the raw materials side and request Mr. Björkman to share his view with us. Jens?
Okay, so unusual setting for us to sit online, but it's good to be able to run these events still. This past 6 months, or yeah, 6 months has been very different to what anyone has ever experienced, and of course has had a huge impacts on our industry and raw material sector, but in perhaps different ways. In China, where the initial pandemic started, the Chinese market was in lockdown long before anyone else was, and sort of handled it on their own. But when the rest of us were harmed, or when we were into lockdowns, China started to re-emerge from its lockdown. So in a sense, sort of we're saving the situation, even though it's been a very tough ride. So when the initial spread of the pandemic was in March and April, prices of course crashed, and the collection of ferrous scrap crashed, and demand for ferrous scrap crashed. So very high degree of uncertainty during that period when nobody really knew what was going to continue, and what happened was ferrous collection halted dramatically in all over the world simultaneously, but in some regions steel industries were not hugely affected that were scrap based. The major impact was huge blast furnaces that stopped the production, but in some cases steel mills still ran. So, for example, in the European industry, Northern European lockdowns were less dramatic than the Southern European ones. So some business was shifted towards Northern European scrap-based mills. So all of a sudden demand picked up, and because scrap collection in major countries was highly affected, the prices fairly quickly recovered. So once the initial effect, the very negative effects had been handled, then ferrous scrap pricing was fairly stable, and for the whole period since April has been fairly solid during that period. So when you look at the summer months that we've just gone through, most regions have been recovering fairly quickly, and have been having to add sort of raw material inventories to be able to produce more and to add utilization rates. So we had initial prices of slightly under $300 before the pandemic. It came down to lows of around 220s or something like that, and now we're back. So at similar levels as pre-pandemic. And when we can look at is the major savior of the quarter was, of course, Chinese extreme demand for raw materials and semi-finished steel products, which they imported in to a high degree from many regions of the world, and held up most of the steel sector elsewhere, or at least those that were able to move material to China. So and that has also held up demand for ferrous scrap. So yeah, and outlook, of course, a lot of uncertainty about continuation of lockdowns or re-locking down, but it seems also that a lot very positive signals, as we heard also from Elsa previously, that construction and the opening up is actually expanding in many regions at the same time. So we're a little bit more optimistic on the demand side going forward.
Thank you very much. Thank you very much, Jens. In the meantime, apparently my colleague solved the problem about the pause on my laptop. Now, let me once again read the question of the poll. How do you view the balance of imports and domestic rebar production in your country? The attendees responded. Thank you very much, ladies and gentlemen, for your interaction. 36% of the attendees said they thought the imports and domestic rebar production in your country, in the country, was well balanced. 9% thought there were too many imports, and 54.5% thought that there were not enough imports. So I would appreciate the Traders Committee chairman, co-chairman of the Traders Committee, and the Producers Committee if you shared your opinion about this poll result as well. So next is Traders Committee, and I would like to request Mr. Dan Baysal to start, please.
Well, good morning and good afternoon, ladies and gentlemen. Let me just talk about the market in Americas, which is more familiar to me. I'd like to summarize the market conditions in the US as stable, improving from the big shock we experienced in the last 2 quarters. However, our capacity utilizations are still way behind 2019 levels. For example, according to AISI, even as recent as week of September 12th, the production was about 1.5 million net tons with capacity utilization of 65%. In comparison, same week last year, it was 1.8 million tons with capacity utilization around 80%. So there is improvement, but we are still 15% behind 2019 levels today. Lately, US residential construction did show an increase in some healthy levels, but non-residential construction is still down with little prospect for recovery. Naturally, imports are low and mostly from the non-Section 232 countries like Mexico, Canada, or Brazil. This September, we finally saw a general price increase in all categories in the level of $30 to $50 per metric ton. However, some of the prices are still low, like hot rolled coil is still at the level of rebar. These increases were mostly due to increases in scrap prices and, of course, restocking of all service centers who were by choice very low on inventories. With the return of increased COVID-19 cases and approach of winter months, it is possible that some of these prices may not hold and may even give in some. In Latin America, the situation is improving, but not any better. The capacity utilizations are at low 60, and recovery is very slow. Long products did show an increase in the 3rd quarter by 15 to 20%, but increase in flats are just under 5%. Some commodities like seamless pipe did not even improve, still below 25% of last year. In general, it is safe to say Latin America is on the road to recovery, but long before the 2019 levels. Certain countries like Brazil and Mexico are going through much higher COVID-19 cases, which compounds the problem. Thank you.
Thank you very much. Thank you. And next, we continue with the traders. Now I would like to request Mr. Eryilmaz to share his views, please.
Yeah, hello Murat, and hello everybody. It's a new kind of IREPAS meeting, but certainly it's good that we have the technical opportunity to meet this way. And so what I said before, the only thing we probably miss after all that is a nice joint cocktail reception in the hotel bar. So going from there, yeah, let me give you a brief update on the European side. Well, in Germany, the construction market was really running at 100%, even during Corona times. Literally no job site was closed. The demand was even higher than in normal times because many construction sites were afraid that due to a corona case, the job site may be stopped or that workers will not come to work anymore. So they even try to speed up the individual projects, which even increased the demand of steel at that time. On France, Italy, and Poland, and Spain, and the UK, however, we've seen temporary lockdowns and even borders which had been closed, which really led to an interruption of usual trade flows and delivery flows. And we expect that the consumption in those areas dropped probably between 10 to 25%. In March and April, the mood was in most of the European countries so depressive, with the scrap price dropping by almost $70 from early March to end of March. And many players had the impression that because of this coronavirus and the uncertainties about this disease is bringing the prices falling through the floor. So this, however, was a complete misreading of the world market reaction, because it also led to the effect that scrap got rare. Many people did not go on the street anymore to collect scrap, and many scrap yards were not willing to allow all these people joining their factories to drop the scrap. So it was also a hygienical problem. So beside that, China started to buy whatever was available in raw materials, but also in semi-products like billets, slabs, and hot rolled coil. So already in mid of April, the scrap price gained by almost $50, and in June even up to $60 compared to the lowest level we've seen in March. So from the lowest scrap, or from the lowest point up to now, we even see a difference of $90. The reasons for that I've posted already. So it was mostly because of regional interruption of trade flows, closed borders, and so on and so forth. A similar price trend we've also seen in the debar market, not to that extent, but almost to the same extent. So we've seen price increases from early March to now by almost 60 euros a ton. End of last year in Netherlands, there was a big issue on the new nitrogen rules implemented by the Dutch government based on EU laws and restrictions. This has stopped many construction sites in the Netherlands and led to a reduced demand. Spain is doing so far similar to what it was before. Eventually, this corona effect of less than 10%. I think that number was also mentioned by Alex Gordienko in his report. And we see similar numbers for France and Benelux. The Polish market has a similar situation, and only Romania, Bulgaria, and Greece seem to be on more or less the same consumption levels as before. Italy suffered certainly the most from this lockdown because they were the first to close. Many mills were without any customers overnight. Job sites were stopped. So I have no correct figure of their reduction in consumption, but it must be heavy. But the new stimulation package, which the EU brought up with 700 billion euros, will certainly help Italy to invest a lot of that in infrastructure. And we just realized and see from the poll, Murat, you have raised, namely that the majority is of the opinion that the majority of this amount and consumption will be in infrastructure. I think this is, or we can assume that this is certainly also happening not only in Italy, but also in the other countries. Well, in the UK, also this was already posted by Alex. There is this huge project of the HS2, a high-speed rail trail coming from London to Birmingham and then going like in Y to Birmingham, and from Birmingham to Manchester and Leeds. And this will certainly consume a couple of 100,000 tons over the next years, so an enormous project. But again, or not again, but here the big question mark, what is going to happen with the UK? The hard Brexit is very near to come. Only very good optimists are believing that there will be still a soft Brexit. So to what extent this will have an impact to the overall European consumption, production, and an end is a big question mark. And so, yeah, maybe not really of interest for the European community right now, but probably more for the UK customers and producers of steel. So, yeah, this is in a nutshell my European report.
Thank you very much, Mr. Alf. So finally, can we listen to the producer's point of view, Mr. Chairman?
Yes, hi again. As we said in the beginning, this is the first time we are holding this meeting online. People are talking about the new normal, but I hope this doesn't become our new normal, because it's always good to see each other face to face and have talks. Well, having said that, let's go back to business. But I've said many of the things that I'm going to say in my opening speech. I think it was covering most of the things. The COVID-19 pandemic has, of course, certainly worsened the market situation, and delays in investment have reduced demand for all steel products, of course. Today, China is the driving force behind the whole steel market. Investment activities and stimulus measures in China are positive for the long product segment. Domestic demand in China is very strong, and they have no intention of any exports today. Today, it seems that doing business also become more regional in a sense. The situation in the global long products market has not changed prior to coronavirus pandemic. We can say that the overall market is somehow stable in these days. Mills are still positive, and the demand is more or less the same as it was before. However, there is a huge uncertainty regarding the future of the virus. Despite all the ongoing political uncertainties, regional markets are performing well. Demand is kind of back in Europe. The cotton benders are quite busy. Although Doğan talked about it, demand in North America seems to be okay in these days. US prices finally moved up following the recent raw material increases. We are currently in a period of recovery, of course. Economies are opening up. Demand is strong from most parts of the world. Competition is still high in the market, although coming period seems to be satisfactory. There are many also unknowns due to coronavirus. This is the summary of what I have discussed actually in my opening speech, and this is what we see.
Thank you very much, Mr. Chairman. Thank you very much, gentlemen, for sharing your points of view with us and the attendees. I would like to recap what I heard, but before then, maybe we can also show our fourth and last poll to our audience. And when we come to that, when we come to the related question, we can have the poll results as well. The question is, if I would like to request my friends to upload the poll. The last poll question is, in the 2 years since US Section 232 tariffs were implemented, how have they impacted your business? The multiple choice answers are strong negative impact, mild negative impact, strong positive impact, mild positive impact, and no impact. Let's see how the business of our attendees have been impacted with the US Section 232 tariffs, and then we can discuss later on. So once again, thank you very much indeed for sharing your views. As far as I have understood, and according to my notes here, I understood that right after the pandemic had hit the markets back in first quarter this year, there was a very high degree of uncertainty. The prices obviously immediately crashed and nobody knew what to do. I have understood that the precautions, lockdowns in Northern Europe was less dramatic compared to Southern European countries, and therefore some business shifted to Northern Europe. But scrap collection was immediately and highly affected. And when demand came back to the market, prices recovered pretty quickly, fairly quickly, because of the supply issues. The prices were slightly under $300 per ton before the pandemic hit the markets. It went straight down to 220s per ton, and then now are back to pre-pandemic levels at around $300 per ton level. Obviously, there has been a huge demand for semi-finished goods, semi-finished imports from China, which has impacted the demand for raw materials elsewhere in the world. But there is still a lot of uncertainty and question marks because of the possible lockdowns that may come in the coming months. I'm checking my notes as I have heard from the Traders Committee. I understood that the market in Americas is pretty stable nowadays, improving from the big shock right after the pandemic, but still is 15% behind last year's level. Imports are still low and mostly from non-Section 232 countries like Mexico, Canada, and Brazil. And I have understood that it is very much possible prices may not hold because of the uncertainties. In Europe, the consumption I understood was 10 to 15% down in mostly in lockdown areas. March and April was too depressive, but since then, as I have also noted from the Raw Material Suppliers Committee notes, the price delta between the lowest point of scrap prices and today is $90 per ton, almost. Regional interruptions were in the picture in terms of trade, but I have also noted that price increases from March to today, product price increases, has been at around 60 euros per ton level, right, Mr. Alf? Obviously, a lot of the markets in Europe, I noted that they're more or less back to pre-pandemic levels in terms of demand. Some of them are still having problems, like Netherlands, Spain. Italy suffered mostly, I have noted. And there's a huge project in UK related to high-speed rail trail, and it is expected to consume a lot of steel. But obviously, there are lots of uncertainties about the Brexit. Is it going to be a hard Brexit? What's going to happen with the production and consumption, etc. And the producers' side think the COVID-19 pandemic obviously worsened the market situation and reduced demand, but China has been the driving force, and today China still is the driving force in the market. The mills are positive as far as I understand. Demand is seen as more or less back to previous levels, pre-pandemic levels. Demand is kind of back in Europe too. North America is more or less okay. Competition, as seen by the producers, is still high in the market, but there are certainly a lot of unknowns and worries about the future. Now, please allow me to go ahead with the questions we have collected. And in the meantime, I will also check the poll results. Let me go back to the questions right now. I hope you all can see the question on your screens, right, Mr. Chairman? Can you see the question, first question?
Yes, yes, of course.
Okay, great. Let me start then. This first question is for the Raw Material Suppliers Committee. Mr. Björkman, what has been the impact of the loss of strength of the US dollar on international markets?
Yeah, so during this period, we've seen a weakening of the US dollar, which has simultaneously seen raw material prices, commodity prices be a lot stronger. So it's absolutely had an effect on commodity prices, of course. So fairly normal correlation. And yeah, so we've absolutely seen this impact the raw materials side, also ferrous scrap. So prices have been moving upwards as the dollar has lost value.
Thank you very much. Moving to the next question. This is for the traders. Mr. Baysal, I'd like to request you to respond to this question. Import buyers in the US have been extremely hesitant to place offshore orders during the pandemic due to perpetual uncertainty. What do you think it will take to restore confidence in the import market?
Well, since all this started with COVID-19, proof of safe immunization will probably be the first step to restore confidence. Other than this, a healthy price stabilization will help. The recent price increases without any real change in COVID-19 cases, which was the root of the problem, does not give any confidence, especially when considering the possibility of second wave of pandemic in winter months.
Thank you. And next question is for producers, Mr. Chairman. Turkish mills have recently sold some rebar cargoes to the US. Is this trend likely to continue in the coming period? What will be the main determining factors? What do you think?
Well, the new shipments were booked in the aftermath of the Section 232 duty revision for Turkey back to 25%. That is why it looks as if there is a surge, because the comparison basis is very low when the duties were at 50% level. The truth is that Turkey will not be able to reach the levels of exports volumes it had prior to Section 232. During the time when Section 230 duties were at 50%, Turkey's share was replaced by domestic producers in the US and some other countries such as Italy, Spain, Portugal. And it's not so easy to win back what we have lost to these producers, especially when Turkish producers are also still under anti-dumping and CVD orders. Thank you.
Mm-hmm. Thank you very much. Before I move on to the next question, would you please allow me to share the poll results with you, gentlemen? Let me repeat the poll question. In the 2 years since US Section 232 tariffs were implemented, how have they impacted your business? So 42% of our attendees said there has been a strong negative impact. 36% said there has been a mild negative impact. 4% said strong positive impact. Another 4% said mild positive impact. And 14% said there was no impact. So overall, according the 78% of our attendees say there has been a negative impact in their businesses, either strong or mild. And only 8% says there has been a positive impact. So our next question is for the panel, gentlemen. What are the main issues at stake for long steel and scrap markets from the outcome of the US presidential election? What changes can we expect to see in US trade policy if Biden wins? What can we expect if Trump wins? I would really appreciate if you can also comment on the poll results if you like. And maybe we can start with the America's side. Mr. Baysal, would you like to take the head start?
Okay. The outcome of the election is really up in the air, especially since passing away the Supreme Court Judge Ginsburg. The possible reversal of famous Roe versus Wade case in abortion will not go well with some moderate Republicans, and Trump may lose some votes. Having said that, if Trump wins, not much will change. US will continue its protectionist policies and file maximum number of anti-dumping or countervailing cases until no real competition is left. Same with the Section 232 cases, even though it's hurting our downstream industries who employ much more than the producers Trump is protecting. Now, if Biden wins, his administration may be more sympathetic to fair trade, but I'm afraid they also will not want to forego the Section 232's huge free income, or rather I should say, tax on the consumers. My guess is that not much will change in the first 2-3 years, even if Biden wins.
Any other comments from the panel?
I agree with my colleague Doğan. If Donald Trump is elected again, it's almost clear that there will not be any change in the way they conduct business. On top of that, lately, by implementing Section 232 duties for aluminum in Canada, Trump showed that he intends to continue and use all the instruments at his disposal. So, but on the other hand, if Biden wins, I don't know, there might be a chance in the trade war maybe against the trade war that triggered in 2016. We just have to wait and see probably.
Okay, thanks very much. Any comments from Mr. Björkman on the scrap side?
Well, the capacity in the United States is on the growing, and investments into new melting furnaces is also planned. So I think the investment activities in the United States is longer than just single terms. So over the long run, maybe it doesn't affect the industry, but in the short run, of course, we'll see differences in how you conduct trade. But in the long run, investment activities, it seems that the United States is building up melting capacity. So scrap demand will continue to be very strong in the United States, is my conclusion.
Thank you very much. The poll result was once again 78% negative impact. So any different opinion from the panel on the poll result, or do you gentlemen agree that your businesses have also been impacted negatively because of the 232 tariffs?
For sure it is. I mean, it's really been affected seriously, and we're still waiting for a recovery. Our businesses that are down in general, the trading business down maybe 50%.
I think every trade measurement, especially if it is done well to protect a local industry, is not good, because it always has an effect to traditional and build up trade flows and reliability, or not reliability, but a dependency from buyers and sellers. And so yeah, everything what you are doing has a consequence, and whatever the consequence will be is good for the one side, bad for the other side. But of course, being someone living from free trade and who is active in exports, every trade measurement and every trade restriction of a government or of a country is not good and has a bad impact.
Sure, thank you very much. So if there are no more comments, I will move on to the next question. But before I move on to the next question, let me remind you, ladies and gentlemen, that we will be running a Q&A session after we finish answering these questions. So please type in your questions. You may find the Q&A section on the right-hand side of your screens. Moving on to the next question. This is for the traders once again. And Mr. Baysal, would you mind if I direct this question to you once again? Non-residential construction in the US has not fared as well as other construction segments during the pandemic, especially commercial construction. Do you think there will be a full demand recovery for projects such as office and retail space after the pandemic? Or do you think there has been a fundamental shift in demand that will reduce the number of such projects going forward?
Well, it sure is nice to talk about after pandemic. It's a good feeling. I think there will be some fundamental changes coming after the pandemic, and some are already in progress. For one thing, there will be more people working from home. We all have learned how well it works in certain job positions. With this, companies will occupy less office space. This will create an overcapacity in office buildings. Considering that the segment was overbuilt even before the pandemic, I would expect a major stagnation approaching this market. In the retail construction, the situation is not much better. Again, we already have learned how to buy our necessities from internet providers like Amazon. I see that there will be less use of malls as we know it. However, on a positive note, more warehouses and distribution centers will be built. And lastly, less rush hour traffic can be expected. That's the only good news.
Okay, thank you very much. Moving on to the next question then. This question is for the panel once again, gentlemen. In the current international political and economic juncture, US-China relations are in a relatively tense state. Do you think this tension will exert an impact on the global steel market, and how much of an impact do you expect? Amid the continuous pressure exerted on China by the US, will there be pressures also in the trade between China and other steel markets across the world? If so, how might all market participants deal with such pressures?
Well,
would like to start.
Let me say a few words.
Please go
China
ahead, Mr.
shut out of the US steel market long before the trade tensions due to anti-dumping and CVD measures on almost every single possible steel products in China. Product China can export to US. I mean, so the current trade dispute between China and US, I don't think really have much impact on steel products.
I think each country will decide on their own. US-China relations will be tense, especially if Trump wins again. However, most countries will go on as they are doing today. Most countries already have established safeguard methods to stop the overflow of Chinese steel to their countries. So not much will change in that regard. On the other hand, China will try to have more bilateral trade pacts in certain parts of the world, and hopefully this will help dealing with the pressure for China and those regions.
Thank you. Any other comments?
I fully agree with Don. Sorry, I fully agree with Don, and can say that every country will find its own way to deal with that. On one side, nobody ever has an idea what the next surprise of the current or maybe future administration will be. Taking TikTok as an example, whoever thought that this is going to happen? Yeah, and so what else as a fantasy can come up? I don't know. Maybe our minds are not so big. But yeah, at the end of the day, each and every government has to deal with this and have to see where are the pros and cons for the individual situation, and they will follow the way the political type and probably more political rather than economical these days.
Thank you. Anything you would like to add, Jens?
Well, the exports of steel products from China was enormous in 2014, 15, 16. And now we've even seen this year that China has been a net importer of steel products. I think even from the United States. Probably less of friction when it comes just to the steel, but in general, probably continued friction. On the other hand, we see a lot of buildup of steel capacity outside of China in the near region in Asia. And I think the ASEAN countries' buildup of steel is probably more problematic than precisely China. I mean, most of those investments are Chinese anyway, but outside of China. That might pose a threat going forward, but in general, China will most likely continue to fairly quickly adjust to scrap-based steel production to make sure that they use more of their domestic ferrous materials going forward.
Thank you very much. Shall we continue with China? This next question is about raw materials, Jens. No more solid waste import applications will be accepted or approved by China's Ministry of Ecology and Environment as of 2021. Recycling steel materials which meet the required criterion may be imported and not need to be subject to any quota limit, while imports will likely resume by the end of 2021. All indications are that scrap planned to be exported to China will undergo dismantling in other locations. Which locations do you think are most appropriate for the dismantling operations in question?
Previously, China was quite a large importer of ferrous scrap to its steel industry, as they had very little ferrous scrap available. And China is a vast country, so in some areas you have quite a lot of ferrous material, but you might not have steel mills that are able to use that material, so it has to be transported. And as we know, in many other countries, domestic transportation might not be the most efficient. So sometimes you should take material from elsewhere, which is processed in a better way. And also in China, what you have is quality issues in some areas. So the mill might not be able to use only domestic scrap in some regions. So it's a more efficient way to import processed scrap. So to have a ban on processed ferrous scrap is perhaps not the most efficient way. Of course, it has impacts, but in general, it's a positive effect. Or it's for free trade and so forth. It makes the industry more efficient to have the ability to use processed material.
Thank you. Any other comments from the other panelists?
I would like to raise a question to Jens. From what I know is that the scrap price in China, because of the import ban so far, is quite a lot higher than the international market. Mm-hmm. At the same time, if they are opening the borders again, they will buy probably scrap from international markets. So that will, on one side, lead to probably a reduction of the domestic scrap price level, especially if you say that some of that material is not even fully usable for the steel making plants. So what would you think in this case is more to happen, that domestic prices are going down or international prices going up, or what is your...
I think you will see more of a leveling out of the prices. So you would see a domestic price reduction, as you say, and that would also in the long run probably help to speed up the domestic investment activities in melting capacities. So if you have a domestic, if you have a ban on importing and you have a fictitiously high domestic price, then you would see less investment activities in the melting of ferrous scrap, of course. So,
but would you consider that then the international producers have to expect a bigger run on scrap and therefore also increasing price levels on the international market?
You could see that. I mean, you would see a little bit more of material moved in bulk shipments, for example, from modern economies to China, which you perhaps haven't seen in a few years. Instead of moving material in containers, perhaps to container destinations, you could see more bulk shipments to China. But the ability to receive ferrous scrap at the moment is only limited to a few, limited to the buyers that have the ability to receive that material on imports. So of course you could see it in a larger extent, and you would probably see a less dominance of the price benchmarks for ferrous scrap. So you would see a more global trade.
Thank you.
Thank you very much. Let me move on to the next question. This one is still on China, but this time is for producers, Mr. Cebecioğlu. China has been a beacon of hope for the global long steel market during the worst of the coronavirus pandemic. It has been showing strong domestic demand on the back of infrastructure investments and stimulus measures. It has been a net importer of steel since June. It no longer poses a threat to foreign markets with cheap exports. Billet prices in Asia rose by $20 per ton in August, supported by Chinese buy. Will China continue to provide strong support for the global long steel and billet markets in the coming period? Or are there any factors that could bring about a change in this situation?
Well, I think the answer lies within the question. Since the local demand in China is very strong, they have stayed away from exports. And as a result, China has been a great help, as you rightly put it, in a way, the global steel market during the worst of this coronavirus pandemic. As a result, exports to the region, I mean, Southeast Asia, Far East, have increased a lot. As long as the Chinese government keeps these stimulus packages and infrastructure projects going on, which seems very likely for next year, 2021, yes, China will provide strong support for the global steel and the billet market in the coming period. I agree. That's what's going to be.
Thank you. Any different opinion or any concerns from the other panelists? No, I suppose. So let me move on to the next question. This is again for the raw material suppliers, Jens. Raw material prices have been indicating an overall rising trend for some time now. Iron ore prices hit a 6-year high in August, while import prime grade scrap prices in Turkey are poised around the psychological barrier of $300 per ton CFR. But demand for Turkish long steels is not particularly good, while the Turkish flat steel market has been experiencing stronger demand and prices in the past weeks. Do you think this will be enough to keep scrap demand up and prevent decreases in the prices of this raw material in fourth quarter 2020? Or are these upward price trends likely to continue in the coming period?
So this is very easy to answer. But I'm not sure about the poor demand about Turkish long steels. I think demand has picked up quite a bit in the past quarter, and in general, the demand for long steel products is in the uptrend. So I would guess also for Turkish steel producers, it's looking a lot rosier now than it did 4 or 5 months ago, and in general, the activities of stimulus in the world when it comes to construction is staggering. So the general trend at the moment is that we are seeing capacity utilization increase, and that would mean demand for raw materials will continue to increase for a while until we're back to a more normal state. And so it's fairly difficult to say that we are at the price level, that correct price level, maybe. But when it comes to demand levels, I think they are poised to move up. And then it's a matter of if the supply is increasing at the same rate that demand is increasing. So difficult to say. The iron ore prices are, of course, at high levels compared to scrap. So you have a very low conversion from ferrous scrap to iron ore. That would mean that ferrous scrap should move up or iron ore move down, but or you know, that would somehow happen. But at the moment, China's steel industry is doing very well, need a lot of material, and you, at the same time, you have this re-emergence of industrial activity in the rest of the world simultaneously. So you have Asia, you have South Asia, you have Middle East, Europe, United States. They're all increasing production at the same time, and so it's very difficult to say at this specific moment that the conversion factor between iron ore and scrap is too low. I think you need to see a more normalization of industrial activity before you can start to trade on something like that.
Thank you very much. Any comments from the producer side? Mr. Cebecioğlu?
Not really. I agree with you. It's a difficult question, but I don't know. I mean, there has been a correction. The price today is the spread between the cost of raw material and the finished material is very narrow, and there somehow should be either the finished material price should go up or the scrap price should come down, raw material scrap, and we'll see that, how it's going to develop in the coming days.
Thank you very much. Let's move on to Europe. This is for traders, and Mr. Alf, would you like to comment on this one? Would you give us a general overview of the present EU import quota system and its consequences for the market?
Yeah, well, let me give you a little background of what happened in the beginning, so how it developed and where we are today. So in the beginning of the safeguard in July 2018, we had a country-specific quota for those all products and for those countries who had a track record over a couple of years. And so Brussels took a track record period of 3 years. And based on those numbers, they gave a country-specific quota for a couple of countries such as Turkey, Russia, Ukraine, Bosnia-Herzegovina, and so on and so forth, for reinforcing bars, and some others for wire rod. The difference was made that those countries having a country-specific quota of, again, an example, 300,000 tons of turkey. This quota could be used literally in one day. So on the first day of opening, it was possible to import the entire quota. So all other countries which had no country-specific quota, but they were countries which had no track record or were under 3% or were completely new in the market, those were put under the so-called other countries. And the other country quota was literally the calculation based on country-specific quota, deducting that from the overall quota over the track record period taken by Brussels. And so what was remaining was the so-called other countries quota. So in the difference, the other country quota could only be used on a quarterly basis. So the total amount was divided by 4, and then it was only possible to use 1/4 of that quarter in a particular quarter, but the quantities which were not used were rolled over. So that made the funny effect, I have to put in that this country or other country quota was at the end of the 4 months quota or four quarters quota was able to be used by everyone. Yeah, so there was no restriction, there was no nothing, everybody could use this quota. So what happened was on the first day, 1st of April, Turkey has literally used in 2019 the entire open quota from the past year, which was about 90,000 tons. And just 3 months later, when the new quota was opened, another 300,000 tons almost in a couple of days, which of course was a quite massive import at a very short period of time. And this, of course, was not at all what Brussels had in mind and was a surprise to literally everybody. But to correct that, the mills in Europe went on the barricades and went to Brussels and said this has to be corrected. So what Brussels has corrected now is that, first of all, also the country-specific quotas were divided into 4 quarters. So every quarter, again, taking the example of Turkey, has now 75,000 tons per quarter. And the country-specific quota, which is then remained at the end of the 4 quarters, can only be used by maximum 30% of an individual country. So just to avoid that one country takes the benefit from the entire residual quota. Well, the next one, what was also corrected was that the increase of the annual quota, which was in the beginning 5%, was reduced to only 3%. And so the consequence in the market is that imports are extremely difficult and sometimes really hard to manage, because by literally no time you know and have an idea how much is currently being traded and imported when it's going to arrive. So you are constantly running the risk. You have to watch on the import stats to see if you are close to the 25% duty or if you are still within the quota. So that makes it a little bit difficult. So people are afraid, especially to buy something from countries with a lot of producers, which again, for example, is Turkey. In countries where you have 2-3 players, it's much easier to control it. But on the other side, quarterly allocation is also an advantage because, first of all, the market is not front-loaded with all material arriving literally at the same time. Because we have seen in the last period that a supposed good price was not that good anymore when it was imported because of the pressure from all these imports. Also, local mills had to reduce and to react, and the prices were going downwards. So We will see certainly now a more equal import ratio, which makes it certainly better for the market, for the importers, and also for the local mills. And so nevertheless, the safeguard and the new regulation plus COVID on top led already to a drastic stop of or reduction of imports. And if you see that, for example, in 2019, we had 1.6 million tons imported. We are now in the first half of 2020 with a number of less than 0.4 million tons. So that is a quite dramatic reduction, and that certainly has also and is playing a role by all these difficult regulations of that safeguard measurement.
Thank you very much. Very extensive information. Appreciate it.
Maybe it was too extensive, but it's Brussels.
No. They really appreciate it. I think everybody has the very clear picture of what has been going on and the consequences of the situation. Appreciated your response. Thank you. Moving on to the next question. This is once again on Turkey. And this is for the producers, Mr. Cebecioğlu. According to the data provided by the Turkish Steel Producers Association, Turkey's scrap imports increased by 11.3% year-on-year in the January-July period of this year. However, Turkish steel exports declined by 9.9% in the same period. Does this mean that domestic consumption is at good levels? If so, what are the factors behind this?
Well, what can I say from the top of my head? The first thing comes in mind is that, you know, there was this interest rates reduction that created a surge in demand for steel sector, which provided a boost for the domestic market. I think this is the major reason why we have seen this increase in the local consumption. And besides this, I don't know, I mean, if this keeps going like that, I mean, if the government continues this stimulus package for the coming year, this might go on, but I'm not so sure about that. And I cannot say anything else besides this. I mean, this is what it is, because I don't see any other positive signs that the local market should be going on this pace.
Thank you. Thank you. Next question is, sorry. Yeah. Next question is about Turkey and the EU relations. I'd like to go back to Mr. Alf. What do you think will be the outcome of the dispute at the WTO between Turkey and the EU regarding EU safeguard measures on Turkish products? So far, which ex-Turkey products have been impacted the most due to safeguard? You have already had some comments on this. Which were the alternative target markets in such cases?
Well, Murat, as mentioned already in our board meeting, to put any comment to the WTO dispute and between Turkey and Europe, I really have no idea at all. And we hope that maybe Murat can help us on this one. I think what he mentioned already, that as an alternative target markets, Turkey has found, meanwhile, countries such as Singapore, Yemen, Israel, and Hong Kong to substitute those areas. But what is really the situation and the current situation and an eventual outcome, sorry, I'm not involved in that.
Mm-hmm. Mr. Cebecioğlu, would you like to add any comments?
Mr. Alf said a while ago the quotas, quarterly quotas about for rebars around 75,000 and for wire rods is like 77,000, I believe. There is no way of tracking or tracing the shipments to Europe. Maybe you can do some close destinations like Romania, Bulgaria, because it's a one-day of trip. We have lost a lot. I mean, we used to do a lot of business with Mr. Alf. Today, there is no way we could do this because there is no way he can follow or we can follow. Otherwise, he has to pay 25% tax. But again, as he said, thanks to China, they are not exporting, and we have this market in Hong Kong and Singapore. That was kind of a relief for us. We have exported good quantities, and the US opened up a little bit, but not as much as it used to be because other producers took our place. And as I said earlier, it's very difficult to gain back what we have lost. But in a way, you lose one market, you gain from the others. So it's kind of balancing it out. So we know how to be, we are quite flexible. We can, like a book element, we can find our way and to manage. But yes, thanks to China, we compensated what we have lost from Europe, actually.
Thank you. Moving on to the next question, we need to be a little bit quicker. This one is for the raw material suppliers, Mr. Björkman. Do you think there will be a delayed slowdown in scrap collection related to lower consumer spending this year?
Well, no, we are fairly quickly seeing a rebound in ferro scrap collection. So at the moment, no.
Okay. Thank you very much. That was quick. Let's go back to traders, really. To what extent has the COVID-19 pandemic contributed to the regionalization of trade flows? Do any specific example of such changes in trade flows come to mind? You have already mentioned this, but the question was already there. So would you like to add anything?
That is what I was going to say. I think most of it I made already clear in my opening speech and statements, and also, of course, with regard to the trade measurements, that imports have been reduced quite a lot. And so, yeah, it definitely went to a more regionalization of buying, but also selling. Yeah, now it will be slowly to be seen that market prices and import prices can adapt to the domestic prices, which is not yet the case. But both COVID and the trade measurements and the change of trade measurements have certainly led to a more regionalization.
Thank you. Back to producers, Mr. Chairman. Most steel producers reduced capacity early in the pandemic, with utilization rates slowly rising in the last couple of months. What factors, aside from demand, are you considering when deciding how much capacity to add and when?
Adding or reducing capacity, of course, is driven by demand. I don't know what would it be besides this. Of course, but when we look at the numbers, we can see that production capacities are more or less the same prior to coronavirus pandemic. Of course, it played an important role, pandemic. In the beginning, we didn't know what to do and people were kind of panicked, but this is gone and things are going back to normal in a way. Export sales quantities are also in line with prior to coronavirus pandemic as well. Today, we live in a world where we really need to be very adaptive to the conditions that keep changing all the time and all of a sudden. So demand is the main driver, I think, in this case.
Thank you very much. Last 5 questions that we have pre-collected, then we will move on to the Q&A session. This next one is for the raw material suppliers. What is the current situation in the financing of trading of scrap and or other raw materials? Yes.
So at the in general terms, when it comes to financing of trade, it's fine. But when it comes to sort of the, of course, when it comes to problematic periods and when you have build up of resumption of trade again, of course, credit insurances will be troublesome for some businesses. So we can see that at the moment in general terms that some businesses are not running as well as previously, and so and also the risk weights for credit insurance companies might need to be brought down. So it's becoming challenging from that respect, perhaps for some businesses, and more sort of risky, or it adds risk to some businesses in general. So it might become a little bit more risky and a little bit more costly to do business at the moment.
Thank you very much. Next question is for traders, and I'd like both co-chairmen of Traders Committee to share their comments with us, please. How do you view the current situation as regards the option of billet versus scrap for EAFs, and how would you compare EAFs and BOFs in terms of production costs? How do you foresee this picture developing in the next 6 months?
Well, US has more scrap-based production, so maybe that's affecting us more. Anyway, there's a considerable pressure on the iron ore producers to be environmentally sensitive, especially after the dam failure in Brazil. There will be even more restrictions and punitive damages coming as I see it. What this means is that iron ore producers will be under pressure to pass on these costs to the steel mills. On the other hand, the biggest user of iron ore is China, who has mills that can produce either with iron ore or scrap. If the prices go higher, they will convert to scrap. This will increase the demand for scrap, which will push the prices up.
Would you like to add anything?
One thing I can say, today the scrap prices are about 2.4 times of iron ore price. And historically, this ratio is like 2.6. So the expectation is to see either a higher scrap price or a lower iron ore price. My guess is even with the environmental pressure, iron ore prices will eventually come down, maybe by 20%, thus pushing the scrap prices, but only down by 10%. They both are high considering the utilization rates and today's limited demand.
Mm-hmm. That's interesting. Thank you very much. Any comments, Willy?
Yeah, I'm again agreeing with Don, and I would rather be someone having an electric arc furnace, because the amount of suppliers for scrap is certainly bigger than the quite oligopole market of iron ore producers. So I think here we definitely see more competitiveness and also more negotiation power for the individual buyers with an electric arc furnace and buying scrap. So yeah, as Don said, environmental costs will increase and increase and increase, and scrap to be converted to new products is more and more fashionable. So that will certainly be also supported by the governments, rather than putting up new iron ore mines. At the same time, as Don said, yeah, China is the biggest consumer and may also be that one who suffered the most from those prices. But we have heard also on the last IREPAS conference, which took place in last September, that meanwhile China is building up an enormous amount of new capacities in electric arc furnace, probably already in expectation what is going to come. And they are doing their plans 10 years ahead of time and not just to the next election. So I would say, yeah, electric arc furnace.
Thank you very much. Thank you. So going back to producers, you have heard the traders, Mr. Chairman. Do you expect scrap prices to continue their upward trend? And if so, to what extent can you expect buyers to switch their preference to billet purchases?
To be honest, I think the upward trend has already started slowing down since the last week or so. Indeed, a downward correction is subject in these days. I mean, this is how we see it. The preference of the producers, I should say, are always to produce their own billets, unless a significant spread in between scrap and billet prices occur, which we don't think will be the case as long as iron ore and China prices continue strong.
Thank you. Next one is for traders, Mr. Baysal. Would you like to, sorry. Yes. Would you like to take on this one? What's your forecast and outlook for the construction market supply-demand balances in Central and South America for the last quarter of 2020?
Well, as I mentioned earlier, both Central and South America are on the verge of slow improvement in both demand and supply. Unfortunately, the pandemic did hit hard to certain big producing countries like Mexico and Brazil. Since their economies are interrelated with trade pacts, this affected most of the countries in the region. On the other hand, both of these countries, and including Argentina, are freed from the Section 232 duty for exporting to the USA. Therefore, their supply will increase with the US demand. However, I don't see a big improvement in local demand throughout the 2020.
Thank you. So next one, and the last, sorry. Was there any other comment? Have I interrupted? No, okay, my apologies. So this last question is for the panel. Since the last IREPAS conference, do you think the global long steel market has performed better or worse than expected during the ongoing COVID-19 pandemic? How do you view the best case and worst case scenarios for the remainder of the year?
Well, let me start saying that I don't think it has performed worse than it really has performed worse than expected. I don't think any one of us would have expected such a halt in production for such a long time. Though on a positive note, the interest rates were down close to zero in the USA, and is forecasted to be near zero for the next 3 years. With this, banks became uneasy and their income went down dramatically. And to top of this, many of their clients got into serious financial trouble. Finally, they became vigilant with credits, cutting or reducing credit finance. Some banks like BNP Paribas and ABN AMRO are planning to stop trade finance completely. To add this problem, credit insurance companies like Euler or Cofasco canceled or reduced credit insurance to our customers to a point of becoming insignificant. It became very hard for us to sell without credit insurance. Sorry, but I don't see any best case in this year. Maybe after finding an immunization that works, things will improve in 2021. I'm looking forward to a better 2021. Thank you.
Thank you. Any other comments from traders or raw material suppliers or producers? No comments?
Difficult to answer. I mean, first of all, I think on the last IREPAS conference, COVID was not even in our heads. As I said, I think the last one was in September last year.
We had one after that in Belgrade when the pandemic was just about to start.
Right, where almost nobody was there. Sorry, right, this one went out of my head. Yeah, well, to be honest, when the COVID started, well, we all had very, very bad and panic views of what is going to happen. So in my opinion, we came out of that much better than at least I personally ever expected in the beginning of the pandemic. If we see that we are still ongoing, that still everything is running in a decent way, that okay, some have to wear masks now, but you can go to the supermarket again. Yesterday, our Bundesliga was opened and 6,000 people could go back to the stadium. So I think after just 6 months, this is quite an achievement and shows that we are all starting to live with this pandemic, and that we learn every day more and more about this bloody virus and what to do in order to minimize that. So my best case scenario is, as Don said, if there is a vaccine for that by end of that year, early next year, that we can pretty quickly come back to normal life, whatever normal means, because we still will have the trade measurements and the trade cases. But the worst case, honestly, I do not want to share with you.
Thank you. Thank you very much. And Jens, would you like to add some last comments?
I mean, since experiencing the pandemic, after the initial shock phase, I think many have been surprised on the positive side. So a lot of companies have issued sort of negative profit warnings, and the business has been better than expected in many cases. So, but of course, some have also been struggling a fair bit. So it's of course difficult to say, but in general, the expectations were probably that we would be in a worse state than we are or have been in the last few months, and mostly it's thanks to a very quick recovery in China. And going forward, if you look at China, they are back to a fairly normal state at the moment after 6 months. And maybe we can expect something similar for the rest of the world. It will take maybe 6 months for the effects to cling off and for us to return to a fairly normal situation. Yeah, that's the best case, I guess.
Thank you very much indeed. Well, gentlemen, once again, thank you very much. We have really appreciated your answers and the discussion. Now, we will proceed with the Q&A session with the attendees. Ladies and gentlemen, the Q&A feature is on the right-hand side of your screen. Please go ahead and type your questions if you have any. Gentlemen, if you don't mind, let's take a few questions if the audience has them for 10 more minutes. Let me check if we are receiving questions. Okay. There is an anonymous question. Since Chinese rebar producers do not have so strong interest during these days, do you think Southeast Asian markets, Hong Kong and Singapore, are still attractive for Turkish and Middle East rebar producers and exporters? Mr. Cebecioğlu, would you like to take this one?
Yes, I believe this is what we've been talking about. I mean, Chinese local market is quite strong, and they have no intention and no appetite for exports. And we've been dealing with Southeast Asia and you know, in these markets, Hong Kong, Singapore, and we're still talking every day. Demand is there, so yes, I believe we have still have the opportunity for the remainder of the year to ship to get more deals, more cargoes from the area.
Okay. Let me see if there are more questions coming in. I believe we have answered almost all questions available. No more questions are there pending. We have got one. Just a second. This is from Mr. Dalbelash, or Dalbelash. How far or how long do you think China will continue with the current demand? So who would like to take this one?
Yeah.
It's a stimulus program that they have created to really overcome the unease in the market. I can't believe that they're going to continue too much on it. So I really think that, you know, this will eventually go away because, you know, they can't continue with the same increases or with the same purchases, as they cannot export much and their exports are limited. They have trade problems with really many countries. So I don't see, and Chinese economy is based on exports. So I don't see how this will can continue. It's just a temporary stimulus provided by the government, and I think it will probably phase out at the end of the year.
I mean, at the moment, China is on track of producing more than 1 billion tons, and it's already producing more steel this year than it did last year, despite the pandemic.
Mm-hmm.
I think based on the current situation, and as Don said, that they have so many trade cases with so many countries, do they really go and focus on more exports, or will they focus to invest that money for their domestic consumption? I would believe the later, and I would believe that there is still so much work to do, and meanwhile they have so much money available, and I'm quite confident that they will still invest a lot in their logistics. And as we've seen in the last 18 months or almost 2 years, despite all our fears, the volumes going up, but the exports are going drastically down or are not even existing anymore. So I believe with the current environment and in the world politics, I do not see that China will be a major threat of steel exports to maybe in the nearby countries. Yeah, I would not rule out Singapore or maybe Hong Kong, but definitely for the rest of the world, I don't see that they are becoming a threat.
Also, depending on the results of the elections in the U.S., there may be more production moving out of China back to the U.S. So that will probably, you know, affect negatively.
Could be, but as you said, will Biden change the rules within a heartbeat?
No.
The new administration, the first one, they're gonna cancel the safeguard. I mean, we would like to have that for the Europeans, but will they do it with the so-called big trade enemy they have right now? I don't see it for neither for the administration or for the other one. At least not in short term.
The transparent tax, they're not going to get rid of it.
So, okay, thank you very much. The questions have started to pour in. Let's continue with China. Chinese steelmakers have recently claimed that iron ore prices have been driven up by speculation, largely by retail investors on local commodity exchanges. Would you agree with this view or not, meaning the current iron ore prices reflect market fundamentals? Anyone to comment on this one?
As I've said, really, market fundamentals don't really support any price increases, especially in the level that it is now. So speculation maybe.
Well, we've seen quite a lot of trouble with the coronavirus in Brazil, which drew up raw material prices, and they had severe problems to get material logistically out. And so there's been some constraints, of course, from the second largest supplier of iron ore to China. But yeah, if it's driven, it's probably not driven by retail investors, but there's a lot of trading in China going on.
Yep. Thank you very much. Okay, this question is, that question was from Mr. Ruslan Arlamov. I forgot to mention, sorry, I apologize for that. And this one is from Sean Davidson. How long will it take for steel production to return to pre-COVID levels after vaccines are released? You have already mentioned about the current production levels, but Mr. Cebecioğlu, would you like to take this one?
I don't think we are far away from pre-coronavirus pandemic.
Yeah.
We are almost there, and I think we will see more clearly in the coming period. So we are there. I don't think. If you look at the numbers, you'll see it as well. And when you look at production capacities and everything, more or less the same as pre-coronavirus pandemic levels.
Okay. One more question we have got here. This one is asked anonymously. What about the pig iron trend, Turkey and China? Anybody to comment on this one?
China has been a big buyer of pig iron from practically nothing to demand to being the biggest in the world.
Yep. Let me see if there are any other questions asked. Apparently none. So this concludes today's session. Thank you for your questions, ladies and gentlemen. I would like to thank you all for participating. Just a second, sorry. Let me go back to my slides here. Yes. I also would like to thank once again to the chairman of the IREPAS committees, Mr. Jens Björkman, Mr. Don Baysal, Mr. Wilhelm Alf, and Mr. Murat Cebecioğlu for sharing their expertise with us today. And of course, for your time, gentlemen, really appreciated your presence, your comments, the trouble you have taken to connect with us. We really appreciated your presence. Last but not the least, I would like to express our appreciation to our sponsors, İçtaş, Alex Stewart International, Belgian Scrap Terminal, and Link Inspection Europe for their support. Please, ladies and gentlemen, take good care of yourself and hope to meet you face-to-face in person in 6 months' time. Take care and stay safe. Thank you, gentlemen. Stay safe, stay healthy. Bye-bye.